Okay. Hi, Guy. Hi, Bill.
Hello, everybody.
Hola, Antonio. Bon dia. How are things in Portugal, my friend? Oh, we got Judy coming in from Hawaii. How nice. Good group today.
Hi, everybody. And so, look at my beautiful voice. After singing happy birthdays to realtors, so many of them during our Portugal experience tour, I lost my voice of last week. So great
Ah,
to see everybody here. You, Carla, Bill, that we met just, oh, yeah, Mi's here, Della.
that means you were having a good
Hi.
time.
Oh, yeah.
Excellent.
Next year, I got to hire somebody else to do that master of
To
ceremony
sing the
stuff.
birthday wishes. Very well. Brianna, I haven't seen you in a while. Hope all is well.
Hi, Clara. I am a
Hi.
little bit sick, so I need to turn off my screen. It doesn't look good.
Okay. I hope you feel
Yeah,
better. Isabella,
yeah.
hello. Thanks for joining us. Yami, nice to see you. Judy, greetings. Thank you for being on all the way from Hawaii.
Yeah, still jet lag. Sorry about that.
Oh, girl, don't even tell me about it. So we just got back from our World Congress in Singapore. And then there was a 3-day study tour to Kuala Lumpur afterwards. So I did that. And then my flight, while I was in Kuala Lumpur on the way back to Singapore to catch my flight all the way back to the US, I'm at the gate to catch the flight, and I get a text from Delta that my flight was canceled back to the United States. So here I am at the airport. My bags are already on the plane to go back to Singapore for me to come home, and I have no flight. So they rerouted us, but the only way we could get home was to go through Tokyo. So I ended up having a day in Japan that I completely wasn't planning on, but that was super cool. So now I have a Japan passport stamp, and so that was nice. But it was a great trip, and I'm sorry, a lot of you couldn't make it, but we really enjoyed it. They went over and above in Singapore, and then the study tour in Malaysia was just over the top. We got to see and do so many wonderful things, and the people were so gracious. And I just brought my Grand Prix book for, I don't know, it's hard to see when you have the virtual screen, but has all the winners, and it was a fabulous conference. So look forward to catching up with many of you on the trip itself. So Judy, anything you want to share about the trip? Highlights for you?
Well, as you said, the hospitality was wonderful. And I must say this, though. The last time I was in Singapore was on a PIAPSI trade mission in 2015. Wow, has it ever changed since then? But it was interesting on affordable housing. I'll make this one comment because in preparation for our own United Nations observance of World Habitat Day on October 7th. So you folks might want to keep that on your calendar, October 6th through the 8th. But what was interesting was they showed us a public housing, the tallest building of public housing, which is, they actually sell it. The government, the way they set it up, they sell it. They bought it for 500,000 Singapore dollars, and they are reselling now at 1.5 million. And that was information that was actually even shared here in Hawaii by one of our senators to just show an example of how public housing could maybe work toward increasing our affordable housing stock and helping people to be able to buy in the regular marketplace too.
Yeah, we learned a lot. So Singapore itself has 90% home ownership rate. 80% of that 90% is government housing for everyone. So that's just because the property prices are so high. But what you get for government housing and how they take care of their elderly, and their entire population in general was admirable. So there's so much to learn, and it was the spaces were beautiful. So it was a great trip. It was definitely an eye opener, and it makes us see how much more that we need to learn, and ways that we need to better ourselves to move forward in the future with not only humanitarian issues or elderly, but even how they're dealing with climate change and cooling down the city as the world gets hotter. So, but we have a very special guest with us today, and I don't want to keep him waiting any longer because he looks like he has an awful lot to do there. So my dear friend Steve Levy is with us today, and thank you all for being with us as well. Steve and I have known each other for, I just try to go back, and Shlomi, it's been about 15 years, I think, when we met. We used to do some road shows together with the Royal Bank of Canada. This was back when our market in the United States had crashed, and the Canadian dollar was at par with the US dollar. So as you can imagine, there were a ton of Canadians that wanted to purchase here. So we teamed up with the Wealth Management Office of Royal Bank of Canada. Many of you know Alain Forget. And he put these little road shows together, and we were going up to Toronto and also to Montreal to talk about buying in Florida. And we would do 2 to 3 road shows a day, and every show had at least 200 to 400 people. So that's how many people in Canada were interested in buying in the US. And while the dollar dynamics have definitely changed, the Canadians are still our #1 buyer. So because we are seeing things ease up a little bit, we're still seeing Canadians come back to the United States. And I wanted to bring Shlomi in to talk a little bit about it today. So let me just read a brief bio on him, and then I'm going to give him the floor to talk a little bit about what he does best. So Shlomi Steve Levy, for those who are his friends, we call him Shlomi, but you can call it, once you get to be he'll tell you what he wants you to call him. I call him Shlomi. He is a partner of Levy Salas and is a member of the Quebec Law, the Law Society of Ontario, the Society of Trust and Estate Practitioners, and the Canadian Bar Association. He was the co-founder of one of the leading cross-border tax and estate planning law firms in Canada prior to founding Levy Salas LLP. His practice is dedicated to United States and Canadian tax and estate planning for individuals and corporations, Canadians doing business in the United States, U.S. real estate transactions for Canadians, Americans living in Canada, and domestic and international trust, international taxation, corporate law, and cryptocurrency transactions. That's a new one that you added to the resume, obviously, in the last few years. He's frequently invited as a speaker throughout North America for conferences on cross-border tax and estate planning issues. He obtained his Bachelor of Law from the University of Montreal in 2002. Let's give a warm welcome for Shlomi. Thank you for being with us today.
Thank you so much. I think I'm told I need to share my screen, so
that would be great.
And Carla, of course, it's always a pleasure to see you.
And you.
Absolutely.
Too bad we're not face to face.
Yeah, it's always a pleasure, of course, reminiscing about these these road shows. God, that we do so many of them that I'm sure you were in a position to do my presentation, and I was in a position to do yours at times.
I could do some of yours, but I could really do Money Corps like in my sleep.
With Stella Giudicelli.
Stella Giudicelli. Yes, that's right. When she was with Money Corps.
That's right. So it's obviously a real pleasure to meet everybody. It's a real pleasure to be able to come and present for you guys and take you through what it is that we do. Obviously, the market is not what it used to be, but it's still very popular. Canadians still favor the US as a destination to buy real estate. And as the political and tax climate in Canada gets worse, more and more Canadians are looking to relocate to the US. So it brings additional opportunities. Typically, the first foot in the door is going to be real estate. So before moving, they're going to come in and buy real estate, and they're going to pepper you with questions. And the objective today is to kind of guide you through what type of questions you may face and what are the issues affecting Canadian buyers. And I want this presentation to be a value add to all of you so that you could leverage that knowledge and ultimately also leverage our relationship. So when you need questions, you have questions, feel free to reach out to a firm. We have offices in Florida, we have offices in Montreal, Toronto, and Tel Aviv. And so it brings into the Israeli investment component to our practice as well. And a lot of Israelis are obviously in quieter times focus on investing abroad. So I think that that's another stream of business that could be very interesting for you guys. When it comes to Canadians buying real estate, really after they've found their realtor, somebody that they could trust to accompany them, and after they've pretty much established on a neighborhood, that's where kind of the similarities end in terms of ownership structures, in terms of process. Just as a side note, there's no title insurance in Canada. We have title attorneys, and in places like Quebec, we have notaries that do the work that your underwriter typically does in Florida. So just integrating a title company into the mix is a foreign concept to most Canadians. Most often when clients call us and they say, look, I'm looking to buy, or I'm under contract, or I actually already own, the big question becomes is, what's the best ownership structure? And, there's a gamut of things that we look at when it comes to ownership structure. Of course, the tax issues are first, the liability comes in as well as an element to review. Probate, incapacity, transmission to your beneficiaries, all the good stuff that comes into play. When we're talking fundamental tax systems, in Canada, the individual tax rates are very high and corporate tax rates are very low. In the US, it's kind of the opposite. So don't be surprised when your Canadian buyers are asking you, is it okay to buy through a corporation? Why? Most people try to shield their revenues through holding companies. Why? Small business deductions provide for very low tax rates. In Canadian corporations, probably about 19%, where individual tax rate is at 53% and over at the highest rate. So, when people ask us, how should we buy title? It's always the lawyer answer that says it depends. It depends on the fact pattern. It depends on where the money's coming from. It depends on the usage the property is going to have, and so on and so forth. So I don't need to take you through the idea that in one's name, we've got tenancy with right of survivorship. We've got tenancy in common. We've got ladybird deeds, life estates. We've got then we go to trusts, and you've got your revocable or your living trust. Sometimes we've got testamentary trust. Very, very seldom will we see more complex trust structures in Florida. Partnerships are gaining in popularity because people realize that they achieve the same purposes as an LLC, but provide with more maneuverability tax-wise and less, a little bit more control like a corporation from a compliance perspective. Corporations, again, are good from a US perspective, higher tax rates. From a Canadian perspective, there's a few golden rules that make corporation taxable in Canada at different rates, at different in different stages. And one other highlight that I'm going to bring to the table right now is that the two countries have a fantastic tax treaty between them. The Canada-US tax treaty is the most comprehensive tax treaties that is out there. The 5,000 kilometer or what is it, 30 some 100-mile border is had enough influence to make sure that it's really a very comprehensive treaty. And its main purpose is allowing both Canadians and US either living, doing business, or investing on either side of the border to avoid the dreaded double taxation. So the treaty is there. Unfortunately, when we get to corporations, when we get to LLCs, for instance, you see it in the bullet, and you'll see it further down. LLCs for Canadians will trigger double taxation in Canada, which goes against the essence of the treaty. So if there's a highlight that I'm gonna kind of display over and over during this presentation, is the fact that Canadians and LLCs, they don't go well together. They don't go hand in hand for tax reasons. The US will be very happy to have Canadian registered as LLC owners, but in Canada, it'll create tax devastation. So we want to make sure that we're able to guide the clients properly and give them the right time. And I'm probably a little bit like every single one of you, in the sense that whenever I have a client, they're typically well-to-do, they're typically good business people. So all I like to do is provide them with the data so that they could make the right decision. So we kind of practically educate every client, every new client, every time we speak to them. And you know what? Typically, when you mash the data for them, they're able to make informed decisions, and that gets us to the right place.
Steve, I'm going to interject before you jump to the next slide, because I think this is probably the most misunderstood thing for US agents and for Canadian consumers, because they all assume that they know in their head the best way to take title. And they may flippantly say, well, should I do it in an LLC? And of course, an uneducated agent may say, yes, that's typically how we do it in the US. That will protect you tax-wise. And this is where you're going to get yourself in a huge amount of trouble. So it's always best, we don't know their financial situation. What their end game is to get them to people like Shlomi to go ahead and talk about their finances and how they want to, how they're going to use the property, how they're going to will the property, what their whole wealth management strategy is in order for them to save money by taking the appropriate amount of title.
Yeah, and Carla, that's so well said. And more importantly, I don't like to put the blame on realtors or agents more than I need to, but often enough, the clients will show up and they've spoken to a CPA who's on the US side because they've got some questions about rentals and this and that. And they already come loaded with the idea that they're going to do this in an LLC. And that's a huge problem. Briefly, just to put you into context why LLCs are so much trouble, we'll do it now, it'll save us time later, is that from a US perspective, an LLC is typically a flow-through, the disregarded entity in favor of the member. And typically the member is an individual. So let's say you bought a house for 1 million and you sold it for 2 million, and you've got $1 million capital gains. In the US, the LLC doesn't pay the gain. The individual member will pay the gain. And if we use Florida as an example, Florida maximum tax rate is 20%. We go to Canada, and Canada doesn't see it the same way. Canada sees the LLC as a foreign affiliate. And any distribution that is received by the individual Canadian from the foreign affiliate is considered to be a dividend from a foreign affiliate. And the current rate on dividend tax in Canada from a foreign affiliate is approximately 46%. So where an individual, had he bought individually, paid 15% or 20% tax to the state of Florida, comes back to Toronto and has to pay 26.5%. The first 20% is paid to Florida. The other 6.5% is paid to Ontario, and we're done. When we have an LLC, the first 20% is paid to the Florida Department of Revenue. The 46% is paid to Canada. And because we have a mismatch in the type of tax, in the US, it's income or capital gains. In Canada, it's a dividend from a foreign affiliate. We don't get to utilize the treaty and we have double taxation. And what it means is we are at 66% tax on that $1 million profit, where it would have been taxed 26.5% had it been in their name or in a revocable trust or in a partnership and so on and so forth. So we have to tread very carefully with these guys that, it's a struggle, right? Everybody's fighting. Everybody wants to buy right. Everybody wants to operate right. Everybody wants to sell high. It's a struggle finding the right medium, but it's definitely important to provide them with the right advice every step of the way. So another thing that is slightly on a different side of things is everything to do with, well, what happens if one of them passes away? What happens in case of probate? Now, most jurisdictions in Canada have probate. Ontario has probate, BC has probate, but Quebec doesn't. So if you're dealing with Quebec clients, there's no probate. Telling them that there's probate somewhere in the world is like, asking them to speak a different language they've never heard before. But even if we compare Florida probate to Canadian Ontario probate, the differences are pretty important. Start with the cost associated with filing a probate. Second of all, the timeline. Any decent sized property that goes to probate in Florida on an ancillary basis, you're probably looking at least 12 months before it's completed. In Ontario, it's we're talking about 1.5% of the assets being probated, and it takes about 90 to 120 days max. So telling Canadians that they need to know and be aware of Florida probate is important. Here's another interesting fact about or kind of the distinction between the two systems. Florida probate is completely public, where it's not a public affair in Canada. Canadians are typically very private people, and they're always in shock when they speak to us about a property and we ask for the address, and then we're able to tell them what they paid for it and what their tax bill is and what's the mailing address on the file. And sometimes we even get to see pictures, and I could even describe to them the color of their couch, and it freaks them out because everything is so private in Canada. So we definitely want to make sure that once Canadians come into Florida, they need to be made aware that there's some differences when it comes to your probate proceeding. This slide is very dear to me because it enhances the beware factor. We want to make sure that Canadians are getting advice that is proper for non-residents and not advice in the US given by US attorney that pertains to the US in particular. So very often when I speak to Canadians, they say, well, I spoke to my realtor or I spoke to my CPA or my lawyer, and they suggested that I simply have a Florida will and I should be okay. Well, the likelihood is if you have a Florida will, you're no further advanced because it's still subject to probate. But here's the risk. The risk is when people write their Florida wills, they risk revoking their Canadian will. And where Florida happens to be maybe one or two assets, and Canada has the bulk of their assets, and here you go and you revoke, we got a problem. The reason this slide exists, it's because I did some estate planning for a ultra net worth individual, divorced, 3 kids, everything was going to his kids. A few years later, he remarries, goes to Florida, buys a very humble $1 million condo in Hollywood, and the lawyer in place says you should have a Florida will. So he drafts one, and in the Florida will, he says, I leave everything to my wife, thinking he's leaving the condo to his wife. Well, what ended up happening is he actually, by executing a new will in Florida, he revoked all and any wills executed by him in the past. And little we know, his new wife became the benefactor of $50 million. All this to avoid probate. So when you get these questions, there's more that goes into avoiding probate, but at the very least, people need to know how to properly draft wills when we have multi-jurisdictional assets. So that's about that.
Tommy,
Incapacity,
in other states other than Florida, is that law pretty similar?
in terms of probate?
Yes.
Yeah, so Florida is very particular because it's got a probate statute, and in the statute there's actually a tariff that sets the financial rules of engagement for lawyers and probating estates. The first $1 million is about 3% plus cost and disbursement. So typically we like to say 3 to 5% of the fair market value of the asset at time of death. California is probably 4 to 7%. New York, the sky's the limit. But you got some more comfortable states like Arizona where there's no tariff and it's fairly feasible and easy to probate. But here's what I like to say about incapacity. I am more concerned with incapacity than probate. Because think about it. Probate, you own a property, husband and wife, joint tenants by the entireties, or you own a property between, unmarried couple, boyfriend, girlfriend, fiancés, as joint tenants with right of survivorship. We have a solution on first to die. But when people become incapacitated, everything goes into a standstill. There's no right of survivorship. There's no, I'm leaving it to my spouse. He's leaving it to me. Everything gets frozen. And unfortunately, when it's frozen, you can't rent, you can't refinance, you can't sell. And unfortunately, with these cases, people become incapacitated, but then downstream, they pass away. And so not only do you have to worry about incapacity, but there's also potential probate. And what if both parents are incapacitated? Somebody once asked me, what's the solution to not deal with incapacity? Well, unfortunately, the solution is let the incapacitated person pass on, and then you trigger the right of survivorship or tenancy by the entireties. So, but for those who like to be in full control all the time, incapacity, it's as big. It costs a lot of money. The delays in South Florida or Southeast Florida is all I can really talk about. They're astronomical, 9 to 12 months. So we definitely want to make sure that we keep people away from having to deal with incapacity. Here's another interesting fact. Although your Canadian will most probably be valid in the state of Florida or anywhere else, and for that matter, your incapacity documents are not necessarily your Canadian POAs, your Canadian Advanced Healthcare Directives. All those documents will probably not be valid in the state of Florida because Florida is the title state and the execution mechanisms are important and so on and so forth. So we absolutely want to make sure we stay clear of these two probate and incapacity concerns. Protection for your beneficiaries. Everybody's worried about what happens to their asset when they pass on. So a lot of people hear about probate, they hear about incapacity, they hear about all kinds of stuff and they freak out. I like to say that, cheap advice by the pool typically is the worst advice you can get. And a lot of our clients do sit by the pool or in the clubhouse and they talk about probate and discuss what type of problems that may cause them. And next thing you know, they have a solution. And that solution typically is adding their kids onto title. Now, when you're a US taxpayer, when you live in the US, when the beneficiaries are US, it's a non-conversation. For the simple reason is that when you add your kids onto title, you're effectively gifting interest in real estate. And in the US, we all know there's gift tax, but we also know that there's a lifetime gift tax exemption that matches the U.S. estate tax regime, currently sitting at $13.6 million per owner. So, you know, when you take $1 million home, mom and dad both own it. They like to add their kids onto title. They gift, you know, $500,000 each. Really, it's a drop in the bucket compared to the 13.6 million they each have to donate. But let's talk about the rule for Canadians. Canadians don't have a lifetime gift tax exemption. Canadians have an annual exemption of $18,000 per child. So on gifting the kids, 500,000, 50% of the property divided by 250, the parents are pretty much affecting a $500,000 gift to their kids. Now, currently, US gift tax rate, it ranges from 18 to 40%, but 40% hitting fairly quickly on that dial. So anything over $50,000 a gift is taxed at 40%. So here we go. We have mom and dad trying to avoid probate on $1 million, which may cost them 30 to 40 grand. And they decide to take advice and add their kids on title. And that's the taxable gift, $500,000 at 40%. And that's $200,000 of US gift tax. And here's the worst part. That's only on the US side. On the Canadian side, most of these Canadians are going to be owning their Florida as a second home. So although the action of making a gift in Canada is tax-free, the asset itself is considered to have been disposed of when you change ownership. And in Canada, that will trigger capital gains. Now, remember that famous Canada-US tax treaty we discussed? It said that its objective is to avoid double taxation, where there's a match in the tax year, there's a match in the taxpayer, and more importantly, there's a match in the type of tax. In the event that we described, the parents have a $200,000 gift tax liability on the US side. In Canada, let's just say that they bought their home for $500,000 and they're gifting half of it, and it's worth $1 million. We got $500,000 of capital gains, you know, and you divide that by 2, that's 250. And the current capital gains rate in Canada is 26.5% for now. It's going up to about 30. It's going to about 34% starting June 25th, 2024. But again, because we have a different type of match, we have capital gains in Canada, we have gift tax in the US, we don't have a match, and now we've got double taxation. So it's kind of important for people to know that the advice is not necessarily wrong when you get it from an American attorney. It just isn't applicable. And you don't want to get caught. You don't want to spend an excess of $300,000 or $400,000 just because you want to avoid probate that will cost you 30 or 40 grand on $1 million property in the state of Florida. So what do we do? What do we advise clients to do? Well, it depends on so many things. The fact pattern is going to be so important. But if we take a scenario where a husband and wife want to buy their little piece of paradise in the US as Canadians to spend 5-6 months a year, and, you know, they need advice, then it's easy to say, well, we need you to avoid probate. We don't want you to get caught in incapacity. We want to preserve the treaty so that we avoid double taxation. We want to make sure we create mechanisms to protect our beneficiaries. And more importantly, there's the dreaded US estate tax. It depends on whether we need to address it or not. Not everybody is in the 30 million bracket today to be subject to US estate tax. So it's a calculation we'll go about US estate taxes. So a cross-border trust really is the equivalent of a revocable or living trust. It's crafted in a certain way that it kind of has the same mechanisms, and it's treated tax-wise the same way on both sides of the border. And that's why we call it cross-border trust. But the reality, it's mostly an estate planning tool. Having the proper trustees in place will avoid probate, will avoid incapacity. We won't deal with US estate taxes because it's a revocable trust. But here's the interesting part, because of the way it's drafted, if your client bought something for $500,000, realizes, oh my God, we got potential probate exposure in the future, we need a solution to avoid that, we could use a cross-border trust on a rollover basis and not trigger any deemed disposition in the US nor in Canada. But I do want to insist, it's a estate planning tool. It will not avoid US estate taxes. For that, we have corporations, for instance. Corporations will never die. So corporations will never die. There's no probate. There's no incapacity. If properly crafted, there should be no US estate taxes. If properly crafted, corporations typically provide great predator shielding and protection. But then you've got some made in Canada tax problems. Your first problem is that when you own stuff in a corporation, but the shareholder takes advantage of those assets, there's a shareholder benefit rule that is applied. And remember what we spoke about the LLC, double taxation problem. So I'm not a big fan of corporations, in case you haven't been able to tell. But again, if the client's only option is to buy through a corporation, because as mentioned at the very beginning, he's been shielding his money on a tax reduced basis through corporations, we'll explain to them what they're up against. We'll allow them to make the informed decision. And that will allow us to really just, avoid any pitfalls. This is for you. This is just for information purposes. These are typically the tax rates you should expect when you have different ownership structures. Okay. I don't know how many of you deal with foreign sellers. I'd like to think that you've got enough of an influx on both buying and selling. But, there's a few little pointers that we like to give clients that buy, that W8BEN ECI for effectively connected income is a must so that your clients could reduce their taxable income and get taxed in the US on net operating expense income as opposed to on gross. So a lot of people forget to file that and they don't realize why they get into trouble. Selling in the US, I think it's pretty straightforward other than the famous FIRPTA requirements. There used to be a time where Canadians didn't really worry about FIRPTA because we had the FIRPTA withholding certificate application available to us. The process was about 120 days. Title agents were happy to sit on money for short periods of time. The room for mistake, narrowed down when it's a short procedure. Today, I think you're looking at anywhere between 12 and 18 months before the IRS makes a determination, which means some money sitting with withholding agents or title companies, nobody's happy. So FIRPTA is an important aspect to explain to your clients what it's about. People need to know that it's just a withholding against potential tax liability, but people seem to get disappointed. I'm not going to get into the FIRPTA rules. I think you all know that under 300,000 FIRPTA gets waived if the buyer signs a personal use affidavit. Otherwise, it's all taxable in the hands of the seller. Money is remitted to the IRS. They file their tax returns. They get back the delta. So you may not necessarily enjoy this slide because, I know that your business is all about buying and selling real estate. And over the years, a lot of Canadians who bought in 2008 to 2013, when the market was in shambles, the Canadian dollar was strong. You fast forward to 2024, values are doubled, tripled, quadrupled. The exchange rate now is at almost 40%, and it's now a perfect storm for these Canadians to sell. And the idea of selling is that they're going to give something very important called their lifestyle. And they're going to create all kinds of tax liabilities and responsibilities. But, you know, there's options to not necessarily sell, but refinance. And if you're refinancing for the purpose of reinvesting, i.e. refinancing your home, creating some sort of a workflow because you're putting it up for rent, taking that refinance money and buying with it a second unit, well, the good news is you can deduct from your income on the second unit the cost associated with borrowing that initial amount. So there's values in reaching out to banks and having some of your clients refinance so they can grow their portfolio. And more importantly, there's no liability because there's no tenants. There's no liability because there's no withholding. And for Canadians, it's a must because they get to keep their lifestyle. US estate tax for Canadians is a thing. It's not just the US, it's for Canadians. The only good news for Canadians is they only get taxed on their US situated assets. The other good thing for Canadians is if they're willing to disclose their worldwide assets, the US will grant them the same exemptions you guys have, which is 13.4 million. So very little people in Canada are affected by US estate taxes. And when they do, we have solutions for them. So in this, you'll see what's in, what's out, what specifically gets taxed and how it gets taxed. Side note, on our website, we have a US estate tax calculator. So if your Canadian clients are looking to buy a $3 million mansion and they're worth 60 million, you could plug in the numbers and it will tell you whether or not the estate is taxable. So this is a second example where the estate is taxable. So there's tools to establish whether we need to go see a lawyer and ask him to do a whole to-do on this, as opposed to just worrying about his assets and not breaking the back on structures and on compliance and all kinds of stuff that may not be necessary. Most people don't have US estate tax on first to die. Now, of course, that may change downstream, that may change because it will create a potential, there's going to be a segue to the current law. The US estate tax exemption is dropping by half. So probably around 7 million, 7.2 million. Now we're going to have more people that are in US estate tax trouble should they die owning this property. And so there's value in asking the question, what is your net worth? And also being informed, what are the available exemptions? These next slides are just for your own benefit. I'm sure you get questions all the time from your clients. How many days am I like to stay in the US? Can I go and come back? Is there tax liability? So there's two concepts at play in terms of how long Canadians can stay in the US. The first concept is a concept of immigration. Well, how long an immigration officer will allow you to be in the country is how long you can stay, and then you got to leave. Some people really like it in Florida, so they try to stay longer. For the smart ones that don't overstay their visa, there's a form I-539, which allows you to ask for an adjustment of your visa, and provided you file it in before your deadline expires, you'll never be unlawfully present in the US. And typically, most of these applications get submitted, but never completed because, it takes them about 6 or 8 months to approve and form I-539. It came down, it used to be a year and a half. And while they're studying your application, you're lawfully in the US and you can stay as long as you want. Well, Canadians don't want to stay as long as they want because there's a tax problem in overstaying in the US. And we have the substantial presence test that is extremely expensive and onerous for Canadians who may get caught becoming or being treated as US taxpayers. So any Canadian that spends about 120 days a year in the US, it's got very little to worry about. After they go over 120 days, they need to file Form 8840, which is the closer connection form, to let the IRS know that based on the treaty, although we may appear to be longer in the US based on the treaty and your calculation of the substantial presence test, but we wish to retain our closer connection to Canada. And typically it's a simple form. You send it to the IRS, you never hear back from them. And then it just, Canadians, they're a funny breed. In Canada, you send a letter, the Canadian Revenue Agency calls you back or writes you back and says, we thank you for your submission. We will study it and get back to you, but we've received it. So Canadians file Form 8840, send it to the IRS, and when they don't hear back from the IRS, they call the IRS. And I keep telling them, don't call the IRS.
What a
No news
nightmare.
from the IRS is good news for Canadians. So, there's a lot of misinformation out there. And so by not knowing, people make mistakes. And so the objective of today and these little pointers is to give you the tools to be a value add. Not every realtor, not every broker has this knowledge. And if you're able to guide your clients and put them together or in touch with the right people, they'll be loyal to you. They'll be thankful to you. And when it's time to sell, they'll call you. And when it's time to buy again, they'll call you. And that's my objective with these presentations. Of course, once you go over 182 days, there's still treaty-based positions. Basically, in a nutshell, unless you really want to become a US taxpayer, Canadians have all kinds of mechanisms to stay off the radar. Here again, on our website, it's an interesting calculator, but we could calculate whether or not you need to file Form 8840 closer connection form by simply having you plug the number of days per year, and our system automatically does the calculation for you and will tell you whether or not you need to do the closer connection form. Just an ending, because we have US and Canadian lawyers on our team, and because we have offices both in Canada and the US, more specific, Florida, when your clients call us, not only do we have the ability to understand what they're talking about and actually give it a good analysis, we can not only thereafter recommend good structures, but we could also implement these structures. And by doing so, it's kind of a turnkey solution and clients feel great. I'd like to share with you that since I've started this new brand about 7 years ago, I've made an executive decision that whenever people like you, my COI, send clients our way, we will offer them a courtesy consultation. So every time you meet somebody that you think might need advice, might be served by speaking to us for a few minutes, feel free to introduce him or her to us. We will meet with them, we'll do the work. There'd be absolutely no charge until we get engaged. So with that, I'd like to thank you for your attention. I tried to stay within the timelines. I believe I'm doing okay.
You're doing great.
And I'd like to obviously let you know that I'm open to questions, and Carla and Della will have access to this presentation in a PDF form. It'll be secured, unfortunately, but it's for your own good. And you'll have access to it, so feel free to look at it. Feel free to share it with some of your clients if you'd like. And again, we're here for you and your clients when the time comes. So thank you.
Shlomi, there's no questions in the chat, but maybe just tell us what languages your staff speaks.
So we speak English, French, Spanish, Italian, German, and Mandarin.
And Hebrew.
And Hebrew, yes. and a certain level of Arabic as well.
Okay.
I don't know that we could be proficient in legal terms in Arabic, but we will definitely be able to address some concerns in all these languages.
Right.
Carla,
love
this is
the-
Bill. I have
Go
a
ahead, Bill.
question. So I really learned a lot here because I don't do residential, but I find it interesting. How much does the commercial area transfer into the things that you were talking about? So what are additional things we need to look at, or how much is it overlap in the commercial, commercial purchases?
That's Bill, that's an excellent question. I think that once you go commercial, I think you could not worry about probate and incapacity, because typically those things kind of get purchased through legal entities that don't die, don't become incapacitated. So you're kind of making do with that. You don't have to worry about that. But US estate tax is very well a factor. Then you got the liability component on commercial spaces that you typically don't have in personal use homes. A lot of it is still relevant. Again, we're still coming to the US for guys buying commercial real estate. There's still no title companies in Canada. So the process is still different. We're fortunate, we co-own a title company in Hollywood, Florida. And our co-owner is, not only is he an attorney, but he's also one of 400 board certified real estate attorneys in the state of Florida. And his forte is everything to do with commercial real estate and 1031 exchanges, which, by the way, I will say that from a US perspective, 1031s work for Canadians. They don't work from a Canadian perspective.
Oh, interesting. Thank you very much.
Yeah, but we're definitely able to answer and address and put together recommendations for commercial purchases or sales as well.
Very well. Thank you.
There's a question also. Do you see any of your clientele chattering about purchasing in like Spain and Portugal right now? Because we have Antonio on with us, who is living in Portugal and is working with a lot of Americans right now.
We do all those golden visa opportunities. We see a ton of them. We just finished helping a Canadian do his purchase in Marbella in Spain. So for Canadian purposes, or American purposes, I think that the objective is to find somebody that could understand what your reality is in Spain or in Portugal, and make sure that they can guide us and put us in front of the right professionals that are going to be and do right for the client. From tax and strategies, depending on the client and depending on where he's buying, we'll be able to advise as well, both from Canada and the US.
And do you, the question is, do you accompany the buyer throughout the entire process? I mean, you're not doing the immigration as well. You're working with an immigration partner overseas on that golden visa, right?
We don't do
Okay.
immigration, but we will typically, our clients are with us. So it's always been a turnkey solution for us. Anytime real estate and trans-border transaction take place, we'll accompany the clients. Will typically either hire an acquaintance or a contact in the target country to help us, kind of tie the loose ends on the stuff we don't know locally, or vet certain processes that are standard in Canada or in the US and make sure that we can get them to work on the US side as well.
Okay.
On the
Any other
European side, I'm
questions?
sorry.
Antonio, do you want to unmute and ask anything specific along that line, or? Because I'm sure you are seeing Canadians right now.
Yeah, hopefully you can make out what I'm saying with my voice, but all right. And so first, Shlomi, great presentation. I mean, it's one of those that from minute one, usually when they're done in this format, you kind of just like fall over and fall asleep. Not this one. A lot of, a lot of creative. I'm being honest. So
You
it is
should
what
see
it
me.
is.
You should
Can't
see
make
me in
stuff up,
person.
right?
You should see me in person. It's a lot more entertaining.
Well, no, but I think it's about the information and the way, it maybe because I have interest in the Canadians, not so much Canadians in the US, but the process in itself is pretty much the same. It's international. So there's no,
Right.
whether you're buying in Portugal or Spain or China, it's the level of service you could provide, and I could see it here. My follow-up question, well, not a question, but it's just we're looking into, we have our legal team here, but I'd love to introduce you to, because a lot of times there's a lot of questions like, okay, there's similarities and there's differences. Americans, Canadians, taxes, for example, but because there's double treaty, right? There's where you don't have to, you're not going to be double taxed and stuff. So there's a lot of questions, and sometimes having someone on the other side partner with somebody here. So I would love to either, with our clients, either, hey, you know what, like, okay, Canadians well, but from what I see, you do in the US as well, correct? So um, you have a full understanding. And I think I'll probably, I don't know, or Carla will let us know your contact information um, to schedule a call, or even with
Absolutely.
it's coordinating, you know what I mean? Like sometimes because, yeah, they're going to need somebody local. That's a given, right? But then,
They're definitely going to need somebody local, but they're also going to need somebody who understands the reality.
yeah,
And
exactly.
when I say we will accompany, but always have somebody local vetting our ideas and taking care of business on the ground, boots on the ground.
Well, I think any American or Canadian, they trust us. Okay, we built up that trust, but there's always a certain thing when the legal matters come. Then we're not talking about visa, we're talking about taxes. Most important thing for us and for them is the tax ramifications, and having someone like yourself or any, I never thought of that, but it would only add value because it just simplifies it, like you explain it. And the more they understand it, the more trust there is, and I think it's about, and you get what you pay for in terms of service. So, but I'll reach out to you offline. But thank you, because having, as you just
Yeah.
mentioned, if you accompanying about, I mean, obviously, probably you work with the lawyer here in Marbella or in Portugal or anywhere else in the world for that matter, not just Italy, France. It's in Europe in general, and doing that. So
Yeah. I mean,
partnering,
I've done
it's
some,
partnering.
I've accompanied some crazy clients in some crazy endeavors. I've done deals in Croatia and Serbia. People want to go back to their mother country for retirement. People want to have a foot on, boots on the ground eventually. Again, from our perspective, it's more the company finding the right fit with the local teams is important. But again, typically we've been very successful in helping clients, and it gives a comfort level, and it eases the process, and it relaxes the clients, and then the transaction just happens. It becomes smooth, right? So absolutely looking forward to connecting with you. I did want to say one thing. I may have mentioned it, but I'll say it again. These concepts that I've described, they're common law concepts. So, probate and capacity, creditor protection, all the headaches, whether we're in Florida or in New York or in California or in Georgia or South Carolina, and go to Texas, and they're all the same. We may have different tax rates. We may have some states with tax and some without tax, but at the end of the day, if you're dealing with foreigners, typically the higher marginal tax rate prevailing is the one back home. And so whether you're paying 15% in Florida or 24% in New York and 22% in California, provided that it's cheaper than the 26.5% in Canada, there's no double taxation. So I absolutely wanted to kind of say that before we end it today.
I appreciate that, Shlomi. If you will just put your office's email in the chat, we see the number on here. I'm not sure that 866 will work overseas, but I know it'll work domestically. That would be great if you just share your contact information. We appreciate that. There have been some questions about this presentation. It will be on our YouTube channel, so feel free to share that once
Yeah.
we're done.
Carla and Della, John from our office will send you a password. It's not password protected. It'll be password protected if anybody tries to change the content, but we'll
Okay.
send you their PDF so that you can share not only with the attendants, but anybody who calls and wants a copy. So not a problem.
That'll be great. And thank you for offering your services. Thank you for being with us. We know your time is valuable. It's always great to have you and see you. And for everyone who is with us today, again, thank you. Good to see you as well. And look forward to the next time. Everyone, take care and stay well.
Same here. Thank you so much for having me. Stop sharing.